But we do know that one standard deviation is 68% of the time it's going to expire within that. And two standard deviations, which is this number here, means 95% of the time it's going to expire within that 2 times expected move. It's going to expire within that move, that expected move. So that is giving us an edge already. We just identified 2 edges and we haven't even put the trade on yet. You're going to have to adjust 40% of the time. It's actually a little less than that, but I'm going to drill it in your head. You have to adjust 40% of the time. So if you do not know how to adjust, you are doing yourself a disservice when you try to do this trade. What I want you to understand regarding the 7DT strategy, and we might even put one on for Tuesday. I'm feeling pretty confident about that, getting out of it by Tuesday. But what I want you to understand about the 7DT strategy, it's a process that we use to put on the trade. Right? It's 4 steps, but the first step is putting on the trade, and you want to follow those steps of putting on the trade because that's going to be an edge for you. The way we put it on is an edge. So for example, if we were going to do a trade that is, let's say 4 days out. Okay, it's normally a 7DT trade, but I just want to use the 4-day because we might actually do a trade with it right now. What we do with this 7DT trade is we check the economic calendar first. We have this special calendar that David has created for us that you can get within the Discord 7DT channel. You click on it, it's pinned, and it'll take you to the economic calendar that has it highlighted for you to be able to see what's going on. And if it says it's a green light for you to do it, then you can do the trade. That's an important step, you guys. That's an edge. That's eliminating, that's avoiding potholes, that's avoiding potential issues. And then once you look at that, you come in and what you're trying to do is figure out what is the implied volatility at this time? What is the market doing? How volatile, how nervous, how complacent is the market right now? And you can determine that by looking at a platform like TastyTrade or Thinkorswim. You can look at the expected move in the right-hand corner of the option chain expiration date that you're looking at. And that's going to be different on Thinkorswim than it's on TastyTrade. They both can work. I like the TastyTrade one more, but to make it uniformed, for we can all be on the same page, we use the straddle price for our expected move. It's the same thing basically, right? This is what floor traders used to use back in the days for kind of back of the envelope, but it's so close it doesn't lessen your edge. So you have the expected move here is 55. So that's a 1 standard deviation move, or 68% of the time it's saying in the next 4 days or whatever the time frame, if it's 7 days, it's going to expire within this 1 standard deviation move, this 1 expected move of 55. 68% of the time it's going to do that, okay? Well, what we're trying to do is double this number. So we take the 55 and we times it by 2 to equal the 110. That's 2 times the expected move. So what we're trying to do is be at or further than or at least near this number, this 110, this 2 times the expected move. We're trying to set up the trade on both sides, reflecting 2 times the expected move. So as you can see over here, the TastyTrade is saying plus or minus 52. The 2 times the expected move is also plus or minus that 110. We don't know if it's going up. We don't know if it's going down, but we do know that 1 standard deviation is 68% of the time it's going to expire within that. And 2 standard deviations, which is this number here, means 95% of the time it's going to expire within that 2 times expected move. It's going to expire within that move, that expected move. So that is giving us an edge already. We just identified 2 edges and we haven't even put the trade on yet. Before we continue with the video, I just want to quickly point out, if you need any additional help, please consider joining our trading club. You can do that by clicking on the link in the description area, and you'll get a 3-month trial for a flat fee of $60. We look forward to seeing you in the trading club. Back to the video. Then what we do is that we decide that regardless of what it is, we're going to put a trade on no higher than the 10 delta on either side. Right? So we're going to put it on in the 10 delta here, and no higher than a 10 delta on the call side. We're doing an iron condor because we don't know if it's going to go up or go down. We're just betting that it's going to stay within the 2 standard deviation move. And 95% of the time, that's going to be the case. But those times that it doesn't, we want to understand the structure that we put it on initially. And so, how do we understand that? Well, we know that if we put it on at the 10 delta, both sides here, that if we add those deltas up, because we don't know if it's going to go down or go up, if we add them up, that's going to equal 20. So if we subtract 100, or should we subtract 20 from 100, I should say, that's going to give us 80. So you have an 80% chance of winning something at expiration. That's what it means. It doesn't mean you have an 80% chance of winning before expiration. It doesn't mean you have an 80% chance of winning after expiration. It says at the time of expiration, you have an 80% chance of winning at least something, not losing any money. But that's expiration. If the stock starts to go against us, if the underlining starts to go against us, we're going to make some type of adjustment. So how can we determine how often we might have to make an adjustment? How often we're going to make that adjustment before we even touched on either side? Well, I like to use the probability of touch for that measurement, for that number. So you take the delta, 10 plus 10 is 20, and you times that by 2. That equals 40. So I tell members, you're going to have to adjust 40% of the time. It's actually a little less than that, but I'm going to drill it in your head. You have to adjust 40% of the time. So if you do not know how to adjust, you are doing yourself a disservice when you try to do this trade. You're already behind the 8 ball because you do not know how to adjust, and 40% of the time you're going to have to adjust. What's tricky about this trade is that you can put it on and you can get out without having to adjust. And sometimes that can go as long as 4, 5, 6 months. I'm not joking. That's happened to members. You do not have to adjust often. It's less than 40%. But this is the law of large numbers. Eventually, the more you trade this, it's going to equal around that 40% because we're betting you're going to have to adjust before you're touched. So I'm just using that number as the kind of a gauge on how often you got to adjust. Have to be ready. So you understand your odds. You understand your probabilities. You already know how to adjust before you have to adjust. You already know what you're going to do before you have to do it. It's like going into a movie theater. You guys heard me say this before. And if you do not know where the exits are and something goes down, something jumps off, and you have to exit, you already behind the 8 ball. You already have put yourself in a worse situation because instead of just acting because you know what to do, you're losing valuable time. The next you know, you're getting run over by the crowd, perhaps. You have to know what you're going to do beforehand. That's trading. That's how you survive this game for years and years and years. One of the ways, right? If you're doing stuff that has risk of ruin, right? Short-term trades, day trading type of trades, they have the risk of ruin. It's the truth. This is why so many people fail because they do not have the right plan. They do not set themselves up for success. I want you to be successful. So do not do this trade until you're ready. You can always do the safeguard strategy and you don't have to worry about realizing losses. That's another topic, so I'm not going to go into that now. But this is putting on the trade, and it's a lot. And I'm not even talking about everything yet. This is putting on the trade to have an edge. That's part one. Part two is understanding what's going on with the trade once you have it on. That's important to know how to read the trade. I mean, if you don't understand how to read gauges on your car, you could be driving and it's overheating. And you're just going to damage the car more because you don't understand how to read the gauge on your car. The step 3 is understanding how to adjust. This is the most difficult one, but this gives you your biggest edge. It's nothing can happen if you're a good adjuster. It's almost nothing can happen that you can't overcome. It's not everything. I'm not saying that, but it's almost nothing you can't overcome using this 7DT strategy. That's why we call it print money 7DT strategy that you can't overcome. The fourth step is taking off the trade, understanding how to take off the trade. It's nuances to it. We talk about it in the course. It's a lot of details around these 4 steps, and that's why you have to study, study, and study some more. And it's going to be worth it, you guys. If you can count on 1% every single week at least, it's going to build up your account fast. It's going to allow you to count on monies that you can supplement your income with at least. It's an amazing feeling to be able to support yourself from the monies you take from these markets. It is an amazing feeling. And it's such an amazing feeling that sometime, and I don't like to say this on recording or live calls, but I'm using this as an example. I'm using this to emphasize how much I love and how much power or this amazing feeling you get from taking monies from these markets that you can support yourself with. I love it so much. Sometimes I'll tell my wife, I'll say, man, if I couldn't be a part of these markets, I can see how someone would want to commit suicide. And so I don't say that lightly. I don't believe in suicide and I don't have suicidal thoughts, but I know some people do. I try to get in other people's shoes sometime. And sometimes you just feel this overwhelming, depression. And I can just thinking about not being a part of these markets, I can get into that room a little bit, right? Obviously not fully, but I can get there and just say, man, I would be crazy, crazy depressed if I couldn't participate in these markets. That's what we want. So with that said, you guys, let's look to put on this trade. All right, so 110 points away. So we got the 110. Let's go to 6110. That's right there. And we're gonna do this is a 7DT trade, so I'm gonna do a 10-point wide, and then we're gonna go to the put side 100 points away. So it's gonna be, what is that? 59. So 58.90 is the 110. So that's there at a 9 delta. And we do a 10-point wide. There we go. So as you can see, we're not getting a ton of, we normally like to do this for $1, but it's not 7 days. This is only 4 days. So we have to be a little bit more cautious here. I'm not worried a lot about the downside. I'd rather bring up, if I'm going to move this, I'd rather move this. Let me see if I can do something like this. Move this to here. And let's see if we move up the call side just a little bit. I know this market is crazy strong. It wants to go to all-time highs. It could do that by Tuesday. I'm going to go with the 5 delta here. And then I'm going to bring that put side back up to a 9, back up to something like that. Because it's only 4 days, I'm going to go with the 195, okay? I'm going to do 2 contracts. I normally do 3. I'm going to do 2 contracts here, and we'll live with that. So I'm going to put this in, and we'll see. We're going to collect a little less, but I'm going to still try to get the $50 per contract, so still try to win $100. But we're just not going to be as close delta-wise, okay? That's what I mean at this point. All right, so I'm going to do this one. We're running out of time, so we have to do the 1DT trade as well. So I'm going to replace this really quickly, and I'm going to put it in at 95, and then we'll see if we get filled at 95. So that got filled for the 7DT, technically 4DT here.